Well, welcome to Current Yield, Grant's Interest Rate Observer of the Air. And I am Jim Grant, and with me, as always, is the great Evan Lorenz, Deputy Editor of Grants. And I think we have Phil Grant on the line as well, who is the author and copy editor, fact checker, fact finder of Almost Daily Grants, the indispensable daily briefing on what has happened and sometimes what's going to happen. That comes extra. And with us today as well is a guest. I guess it's conventional and indeed necessary to say special guest. You can't just have a guest on a podcast. But Eliot Brown is our special guest, and he is the co-author of Cult of We. We work as I'm going to confess, Eliot. Is it Neumann, or something I haven't said yet?
So it's interesting. He's Israeli, and in Israel they call him Adam Neumann, but in the U.S. he had always been called Newman. So I was calling a bunch of people he knew from early in life, and was like, "Why are you talking about Adam Neumann? His name is Adam Newman."
It's like, is it like De Blasio changing his name over and over again? Anyway, we are we. That is now a loaded word. Let's see, 1, 2, 3, the four of us. Are here to talk about WeWork and its place in the financial firmament and whatever happened here. Eliot, I imagine that you are enjoying the most glorious phase of authorship, which is having written. Tell me about the aftermath. Are you on one of these famous book tours, or is it all done? Virtually, or were you out? I know you're talking to other people besides Grant's Interest Rate Observer. Although why that would be, I don't know. But what are you and Maureen up to?
It is. If this is the most glorious part, I haven't found it yet, because mostly it's me emailing people asking to come on their podcast. So I'm glad I got through your spam filter. But yes, we're the book tour. The physical book tour seems to have been killed by COVID, at least for us. We're sort of a little too early or late, depending when you want to count it. So lots of podcasts, and yes, very happy to be done writing, editing, and preparing to promote a book.
Yeah. Well, Evan Lorenz, the great deputy editor of Grants, was kind of early on this WeWork stuff. We wrote about it a little bit, and I remember that I'm not sure who had the more rollicking laugh when the first sounding of the new valuation metric, community-adjusted EBITDA, came across the screen, whether it was Phil or whether it was Evan. But Evan, to you goes the first set of questions to Eliot Brown, the co-author of the new imminently best-selling We, the Cult of We. Go ahead, ask him some questions about this monstrosity, Evan. Let's not let this sit here. Let's get to the bottom of it.
Yeah, one of the questions that I had as I read through your very excellent book is, there were so many intelligent people and firms with incredible track records who not only invested, but also invested more and doubled down with Adam Neumann or Neumann, or however you pronounce his name. I mean, firms like Goldman Sachs, Benjamin Partners, T. Rowe Price, people like Bill Gurley, who are just historically famous in venture capital. And they've been able to see through so many problems in the past, but they didn't seem to see the problems in WeWork until it was too late. Why did so many people buy into Adam Neumann, and what was it that clouded their vision?
Yeah, I mean, that's kind of the central question of this whole saga. Like, we like to say that Theranos was about a founder convincing unsophisticated investors. Henry Kissinger is many things, but I don't think he's a sophisticated investor. Using fake facts to convince these people. WeWork was a very different situation, where you had someone using real numbers and not lying, or certainly not much. And convincing very sophisticated investors to, essentially look at a office space subleasing company and view it as a disruptive tech company. Yeah, the short answer is I think it's just sort of collective delusion and, groupthink, herd mentality, confirmation bias. I mean, there's a bunch of psychology at play, but the basic element was there was too much money in Silicon Valley and not enough good ideas. And so that suddenly made people sort of reach a little more in their minds and convince themselves, or allow themselves to be convinced. And then they paired that with this incredibly charismatic salesman. And Adam, really is, at least in person, a super charismatic, guy who just has that thing that certainly I lack to have anyone interested in what you're saying. But he just, when he's in the room with you, you just kind of get taken into this other world, and you see his future vision as almost though it's real today.
But the red flags that they overlook that you document, the fact that he would drink and smoke marijuana during meetings, that he'd throw glasses through his office window, that he would buy a company jet as a startup, that he would cash out every time they raised equity. There were just so many things along the way that I just kept drawing exclamation points near the end of the page.
Yeah, so, I mean, this is the thing. So I was covering real estate at first and then came upon them in like 2013. And was like really amazed back then. I was like, what is this tiny company that's worth $1.5 billion with just like a few leases? And so it made no sense to me then. And then I just watched as like, I figured the more articles we'd write, sort of pointing out like, hey guys, this is a real estate company. They don't make money in any other way. Why is it being valued like a software company? I figured like people would see that. And then when you'd point out these conflicts of interest, people would see that. But then each time we'd sort of write a story, their valuation would go up and they'd raise more money.
Elliot, are you trying to tell us that objective journalism is no match for a bubble?
It was as you know, given how long ago it was that I started writing about this, I guess I was young and naive in my career. Now I'm bristled and that much more cynical. So obviously nothing matters in life, but at the time I thought it might. Yeah, like an early story I did was just on how it's like, oh, the exact same thing happened with Regis in 2000, which told investors it was part of the dot-com economy, and it got some huge valuation, and then went effectively insolvent before reconstituting after the dot-com bust, or at least its U.S. arm went bankrupt. And I figured like, oh, it's the same business. I'll just point that out, and everyone will see it. And like a few people saw it, and that was it.
Well, I have not seen the final copy with the index, but I did not see a proper attribution. You mentioned that Rebecca Newman is the kind of belated or a post facto co-founder, that she became a co-founder with a little bit of editing and touching up and
revisionist history.
Yeah, I'm not sure that that one of the co-founders of this ought not to be the Federal Reserve System. I mean, free money is the necessary predicate, is it not?
Totally. So yeah, I mean, at the macro level, it's like this was a story, and sort of still is a story of there being too much money and not enough good ideas. And so if you look sort of what happened in Silicon Valley in the time WeWork was really getting its venture money and start, that's when money was starting to flood into Silicon Valley, just sort of hunting for yield. I think people saw the returns that happened on Facebook, and it was like, well, there's got to be others. And so then money just like poured in. And then when it looked like there were going to be these other app-based companies like Uber that was going to, reshape the way we think and breathe and walk. And he got these just enormous valuations.
Don't walk.
Yeah, right.
Right,
Eliot,
yes, exactly.
Speaking of which, I think that's a good seg to ask you about another trend that colors this situation, and that's the shift towards founder control out in Silicon Valley. Do you want to sort of touch on that and sort of the factors the role that's played in this mess?
Yeah, totally. So in the old days of running a public company or a large company that's planning to be public, you would have one vote for every share that you have, even if you're the founder. And if in the old days, venture capitalists were not just after founders, they were after businesses. But, somewhere around this period when money was rushing in, it became much more of almost meme in Silicon Valley circles that founders are these mythical beings. And sort of, it's a sample size of a few, but some very good examples of like Jeff Bezos, Steve Jobs. They're just sort of able to drive toward a vision in a way that is kind of particularly impressive, and a board of directors might not push these companies toward. And so suddenly founders started getting full power, full control of their companies because venture capitalists would give it to them when they, as a way of like getting into a round. And so you had this result where essentially, or exactly, the people are giving these companies like WeWork money and full control, even though the founder could own 20%, 10%, 5%. And so it's really just like you get the keys to the car. The teenager gets the keys to the car and like a full tank of gas, I think is what we say in the book.
Yeah. I mean, one thing that surprised me, not so much was Adam Newman's behavior, which by reading yours and Maureen's, reporting at the Wall Street Journal, I kind of had a glimpse of. But the behavior of SoftBank's Masa son, the fact that he would actually pull Adam Neumann aside and say, hey, some of your brothers in the Vision Fund are growing faster than you. You need to be crazier, even crazier. And the fact that he would egg them on all along the way just to spend money faster and less responsibly, that was also a big surprise to me.
Yeah, like Adam, by his own telling, it was crazy already, right? Like, this is a guy who just was talking about billions when the company had one location. And just is kind of gets no sleep at night, and is just you meet him and you're like, have you had 15 coffees already this morning? It's like where does this energy come from? And so then he meets Masa-son, and Masa tells him on kind of multiple occasions, you need to be crazier. And then Adam was so excited by this anecdote, he would just call up like all his investors and immediately told them, or a bunch of them, that he's like, I thought I was crazy, but Masa said I need to be crazier. And so staff around him would just sort of like put their palms into their faces, because they'd be like, Jesus, this isn't going to go well. so that's where, like, WeWork was already doing things like Adam was buying a wave pool company, and he was flying private all the time. But after Masa came in, told him to do that, suddenly you started to see WeWork invest in, start its own elementary school. He started talking about Middle East peace and curing world hunger. And it just really lost touch with reality as sort of a result.
Was that before or after he banned meat at the office?
That was actually concurrent. So yes, the meat ban was around the time, and that was yet another of the many hypocrisies. Given that, like, a couple days later, he was seen eating a lamb shank, and it kind of blew up in the internal Slack there that he had just banned the whole company.
So this business with Masa-san began in a limousine ride to Midtown to meet Donald Trump, which ride was gnarled in traffic. No, that couldn't have happened.
So that was one of the things we learned. Like, we knew that they had this really quick meeting. Like, one of the things with this whole story is, like, everything is as dumb as it seems. It was like Masa raised as he puts it, $45 billion in 45 minutes by meeting with Mohammed bin Salman from Saudi Arabia at sort of the exact right time in history. And so then, like a month or two later, he's like, well, I have all this money burning a hole in my pocket. I need to spend it on somebody big. And then Adam's like, he meets him for 12 minutes, and then they get in a car because Masa was going to meet the president-elect. And Masa commits $4 billion to him. And it's like, how do you think that's going to end, right? Like, this is one of the second biggest check ever written to a U.S. startup, and it was done in all of 12 minutes.
Well, your book has won some fine reviews. Catherine Rossman, New York Times, I guzzled Brown and Farrell's The Cult of We. Should I quote that again, Ellie? Is that okay?
You should read the second half of it. You got that?
Well, congratulations on that. And what, of all these astounding things, and of all the preceding astounding reporting, were you left to be surprised by anything at the end of it?
I guess a couple things. I was sort of continually surprised by Adam's quest for self-enrichment, because even 2 or 3 months ago, maybe a little more because I'm losing track of time here, but he renegotiated his severance package. I guess it was just one renegotiation. So he renegotiated his severance package from when he was paid by SoftBank to leave the company that he had just sort of presided over the evaporation of $40 billion, value in. And he renegotiated it, and then to a way that he managed to get another like $250 million or so of stock award. And that was at the expense of the other shareholders, right? Like, I mean, it was essentially diluting everyone else. Dilute, and not, he also did dilute.
Both.
Yes. I just didn't, and he was sort of holding up the negotiation for this company to raise more money and go public through a SPAC. And so effectively he was threatening to kind of, hurt WeWork so he could get more money. And maybe the greatest irony with this is those stock options, or effectively stock options that he was doing that with, their original intent was tied to incentivizing him to grow the valuation of WeWork above $50 billion. And he has hurdles he has to hit. And now he gets them, it's worth $8 billion, and he gets them anyway.
Two things. Want to comment on that. I always thought that Adam Neumann missed his true calling, which was an executive compensation consultant. Nobody has better negotiated than he. The other thing is, I wanted to ask you, has anybody learned any lessons? You pointed out that WeWork is actually in the process to merge with a SPAC to come public. Since its IPO collapse in 2020, we've seen stocks that are long on stories but short on profits leap to even higher valuations. I know in your book you point out Tesla and Nikola, and we can actually point out dozens of other examples. And SoftBank seems like it's back to writing big checks with big valuations. Last week, Masa-san wrote an $800 million check to a financial company called Revolut at a $33 billion valuation. Last year, its valuation was 6 times lower. It seems like just about everybody's doing the same things. Like after previous blow-ups like Valiant, at least people said, hey, maybe debt-fueled pharmaceutical roll-ups are a bad idea, but here everyone seems to be doubling down.
I think that's really well put, and the short answer is we've learned nothing. I think there was a brief period of kind of surprising amount of introspection in venture capital where suddenly everyone was like, wow, maybe we should have path to profitability. And, at the time I was sort of like, yeah, it was like, why? Why would you have that for a business? Why would you need even a path to profitability? What's the point of that?
If I can interrupt you for 1 second, Eliot, the New York Times in an article interviewing venture capital people in the fourth quarter of 2019, they said venture capital partners were for the first time in a decade calculating what gross profit is, and some of them didn't know how to calculate it.
I think it was that same article that featured the CEO of Bird Scooter talking about how they were going to turn to profitability, and they're going public through a SPAC, and they hemorrhage money. This is all a long way of saying, yeah, like there was brief introspection, but no, like things are kind of crazy again. Now, the one lesson was learned, like I haven't seen any co-working companies that are valued at 20 times revenue or 40 times revenue. Like I think that era is over for at least a little bit. But there's certainly a lot of things that, like you said, electric vehicles startups is just, there's a company that's worth twice Nissan and hasn't built a single car, Lucid Motors, or hasn't sold a single car. It's weird time.
May I wonder whether we're not overthinking this business about what the market learns and what it doesn't learn. Is it possible that in the absence of interest rates, financial amnesia settles over the entire world?
I mean, you're smarter than me. That sounds right. Now, I do think there's it just sort of depends how much you pattern match, but it just depends and what lesson you take. So at first, I feel like startups that really just burn money and need billions of dollars to grow are not nearly as in vogue as they were in 2019. But so that just means startups with no revenue can be sort of, inflated that much more. And I don't know, we didn't see subprime loans jump back after, 2008 too quickly. So, but I'm sure they will at some point. It's just like these sort of whack-a-mole, I guess.
Well, we do see them come back, but just under different names. Like right now, it's Buy Now, Pay Later, BNPL, and there's all these companies that are apparently tech companies, but they're really just subprime lenders who are, running what essentially is a bank, but they're valued.
Also, the Canadians are doing it now. And I don't have to tell you guys what happens when Canada picks up our bad habits. It's not a good sign. The most phlegmatic people in the world are lending against collateral, supposed overvalued collateral for no interest rates are crazy.
Buy Now, Pay Later has a pretty good marketing ring to it. I do like that.
Did you get to speak to Adam Newman? Oh, sorry.
Evan, please proceed. Did you get to speak to? Yeah.
In the course of your book, did you actually get to speak to Adam Newman?
Not for the book. So we tried. It wasn't for lack of trying, but he didn't want to participate. I'd met him a number of times early in the WeWork reporting process. So back in 2013, and then a few times through late 2016, and then he kind of, I think, realized that my stories were he sort of couldn't bring me over to his side to write about them as a consciousness elevating company. And was just writing about it as a real estate company, and so then he kind of stopped talking to me. So I met him. I know the charisma and remember it pretty vividly. But yeah, unfortunately, he did not want to chat with us for the book.
Eliot, one of the great moments in 2019 was the revelations of WeWork that came about through the circulation of this prospectus. People had readers of the Wall Street Journal knew a lot of the stories that verged on the just incredible concerning the excesses and the craziness of WeWork. But along came with that prospectus, community adjusted EBITDA as the valuation metric, and then also the revelation that Newman and I guess his actual co-founder, founding partner, had registered a trademark on commercial use of the word "we." and for this they charged the company just about $6 million. And I'm thinking, as I saw this, I see $6 million for 2 letters. How would you apportion that? Probably the capital W would get 4, and the small e would get like 1/9. But was that revelation, the sheer tastelessness of charging this company, soon to be a public company, better part of $6 million for the commercial use of a word that we have all heard before? It wasn't a very special word. Can you apportion the world's incredulousness among the various revelations in the prospectus and say which of them was the most deflating to the project of bringing WeWork public?
So I do think, probably longer answer than you want here, but I do think that one was really, the most salient and sort of viral of the revelations in there. And as we learned in the book, and sort of I thought at the time, like it was essentially the smallest conflict of interest that he had, right? Like the guy was literally taking, leasing 4 properties, millions of dollars a year to that he owned to the company, and he had restructured the entire corporate structure of the company, like had lawyers spend God knows how many hours changing the structure of the company so he could get better tax treatment on his stock comp. He'd taken out hundreds of millions of dollars in stock sales, and then he borrowed against his stock. It was just like one dumpster fire after another in terms of corporate governance. And so the word "we" really went viral. Now we learned this is actually like one of the only kind of crazy conflicts that he didn't even seem to know about. But what had happened was he had created a corporate culture and his own private attorney negotiator culture of pushing for self-enrichment, and to the point where no one at WeWork really thought this was that remarkable. They gave him a list of many pages of things that were going to be bad in the S1 that the press could pick up on. This was in there, but it was not bullet point number 1. And so someone who, there was a meeting where they were kind of going through that list, and Miguel, the co-founder, didn't even know about it. And he was like, oh, wow, I guess I'll buy a car.
I had the same reaction with respect to his getting caught out carrying marijuana in a cereal box in an international flight. That this was could be a felony, and that struck me as rather small potatoes in the context.
So as a person who wrote that story, that was the lead of our story. That the story essentially was the straw that, or one of the 2 straws that broke the camel's back and made it so it did an IPO. But so that was the lead of the story. But the whole story was packed with a zillion anecdotes and sort of telling the world that this guy is much more erratic than you think he is. He thinks he's going to live forever. He talks about being the world's first trillionaire and being president of the world, and this is a guy in charge of a company that loses 100% of revenue. It seemed maybe people didn't get past the paywall, but all anyone talked about was marijuana on a private jet, which was kind of crazy. The Gulfstream was so kind of horrified by this that they recalled the private jet from Israel where he had flown to, and then he, of course, found a different private jet to take him home. But
one of the features of capitalism that protects it against the collective envy of people who are not taking private jets is the underlying narrative, and maybe more than a narrative, the underlying tendency of people to get their just desserts, that people who contribute a great deal of society get immensely wealthy, but after all, society benefits along with the founder, the entrepreneur. But this would seem to fly in the face of that particular set of moral norms. And is this not worrisome for the institution of markets and their place in our politics? When a guy how much is he worth now? Billions still, right? And
somewhere around 1.5 or 2 billion it would be sort of my rough estimate. Depends how much money he spent on surfing.
Yeah. You wonder, ought he to have a better part of $2 billion now? Can we play God just for about 30 seconds?
Yeah, I mean, there are a lot of kind of crazy things about this, which is why we decided to, ruin our lives for the past couple of years writing a book on it. But it just at the end of the day, that a guy who was a pretty mediocre baby clothes salesman, but pretty good at convincing people to give him money, was able to make a sort of mirage of the business become the country's most valuable startup, and then have it all like immolate. That he's able to leave with $2 billion or so dollars, and WeWork has had a collective losses of $11 billion. It lost at one point $40 billion of valuation. SoftBank's lost billions. Other investors have lost a lot of money, and he leaves with just unfathomable wealth. That's not a great lesson for society. And obviously, there's a lot of irony that he literally named the company We, and would constantly tell everybody it's about, you need to put we over me. But this is very much a story about me for Adam.
Yeah, there's no we in team, that's for sure.
An alternative name could have been Works for Me.
Yeah, that would have been a good book title.
Yeah. All right. So, what do you think, Evan? I can barely stop guzzling this. So I'm with Catherine Rosman on this one. I guzzle Brown and Farrell's The Cult of We, and I still think that Adam Newman ought to write a thank you note to Ben Bernanke, PhD, to Janet Yellen, and to Jay Powell. Yeah, and so anyway, Eliot, thank you for being with us today. Please thank Maureen. How do you and Maureen apportion the work in this book? I suppose you did 7/8 of it, and she did like an 8.
It was a 100% mind meld with endless phone calls. So it was actually really collaborative and really fun. And we would sometimes watch each other type on a shared Google Doc when the person had an interview that was important. So, it was...
All right, 50-50, straight down the middle. Okay. Well, congratulations to the two of you. Ladies and gentlemen, thank you for being with us. Until next time on Current Yield, Grant's Interest Rate Observer of the Air.